hate to start this lovely morning on a kind of unwelcome topic, but let's talk about the economy. How are you thinking about the possibility of a recession and a potential pullback in ride-hailing demand, maybe even delivery demand, as people's budgets get constrained?
Yeah, it's a little sad that discussions on the economy are unwelcome now, especially at the Bloomberg event. So I think there's lots of speculation as to whether or not we go into a recession or not. I'm not an economist, so I won't speculate.
Other CEOs are not having that problem.
Yeah, exactly. But you know, we get a pretty live pulse of what's happening on the streets every day, right? And in the cities in which we live. And at this point, we don't see any signal of a recession coming. Now, what's different about us than most companies out there is that, just as you saw during the pandemic, a shift from spend on services to spend on retail, that shift is now going back to services, and we are the definition of a service, right? Moving around, travel is back, et cetera. So I do think that our service is benefiting from the shift back. Certainly the reopening helps our mobility business. Our mobility business is growing at very, very high rates, highly profitable. The delivery business, delivery of everything at home, continues to be strong. So at this point, we don't see any signal whatsoever. We have gone through recessions in South America, Mexico, and Brazil in the past. And what you see during those recessions is that as a labor pool eases up, and certainly we don't see signs of that yet here or in Europe, more drivers come onto the platform. And as more drivers come onto the platform continues to grow, service levels get better. So I think versus many other companies, we don't have large asset base. Our cost base essentially adjusts. In stronger economy, our cost base increases as earners and drivers earn much more money. In weaker economies, as you get more drivers into the marketplace, their earnings adjust as well. So I think we are relatively recession resistant if it happens. I certainly hope it doesn't happen. Right now, the signal on the street is things are really strong, and the spend on services continues to be quite robust.
Okay, but you mentioned drivers. Now, driver economics right now are under assault. I mean, as we all know from filling up our gas tanks, unless you have a Tesla, or from those social media photos of $10 gallon gas,
yeah,
you know, that's hitting drivers. Now, you have a fee to help drivers, a gas surcharge, but you're sunsetting that on the delivery side. So what else can you do to help drivers who are now finding the economics of driving for Uber aren't what they once were?
I think the good news as it relates to drivers is that if you think about a driver as essentially a small business owner, the revenue side of the business looks really good, right? And while inflation is pressuring every business, as it relates to driving now, drivers we talked about last quarter, drivers who drive, call it 20 or more hours on the platform, are earning in the US $39, over $39 per utilized hour. So the revenue side of the equation is looking quite healthy. And while
the costs are
up, yeah, the costs are up, and no one's happy about gas prices right now. When you look at the driver P&L, so to speak, actually looks pretty healthy. And we're seeing more drivers come onto the platform as a result. I'm certainly hoping for lower gas prices. Everyone is, but it's not affecting our business.
Have you thought about preserving that fuel surcharge on the delivery side or extending it further on the drive side?
Well, certainly on the mobility side, at this point, we intend to extend it. On the delivery side, a significant amount of our deliveries come from bikes, scooters, et cetera, that isn't as directly affected by those kinds of economics.
So you wrote a couple of weeks ago an email to employees. It was widely circulated. You said you'll treat hiring as a privilege and be deliberate about the pace, but you didn't mention potential layoffs. And I wonder, because other companies and some of your competitors are having to consider it, how you feel about layoffs at Uber.
We don't think they're necessary at all, right? The perspective at Uber is that in Q1, for example, if you look at our gross bookings, they're up 39% on a constant currency basis. We are one of those companies, while our delivery business benefited from the pandemic, our mobility business is absolutely benefiting from the reopening. We talked about guidance of 8.5 to 29.5 billion in gross bookings in the next quarter, profitability increasing, EBITDA 240 million to 270 million. So the business is growing at a healthy pace. However, with the uncertain environment out there, we should be more cautious. There's much more uncertainty as you look forward 6 to 12 months. And my message to our employee base is, we're going to be careful. We feel really good about the business and the trends, but let's not get carried away. And the environment is one that demands caution. And I do think that in a tougher environment, the scale players, right? We're the largest player on a global basis. We're the only player that has the portfolio of go-get. We have a platform advantage in terms of our riders turning into eaters, our couriers turning into drivers, et cetera. We have structural advantages over the smaller players. So while I'm not wishing for a difficult environment, I think we will perform much, much better than our competition in the environment.
Okay, well, I mean, despite the diversity that brings you stability, the market has pummeled Uber, right? And many companies.
Every stock.
You guys are down, I think, about 40% this year. Now, Lyft, I think, added additional equity compensation to its employees to kind of compensate for its share price turbulence. Would you consider something similar at Uber?
No. At this point, I think that if we execute well, and I think a lot of companies out there, they're dealing with their share price getting hit, and they're dealing with fundamentals that are getting worse. Usually your share price follows your fundamentals. And from our standpoint, our fundamentals are getting better, right? For example, Lyft has talked about leading into incentives to bring back their driver base, especially on the West Coast as things open up in the West Coast. And our driver base, for example, if you look in the US, we talked about April, the number of drivers on the road being up by 70% on a year-on-year basis in the US and Canada. In May, that's accelerated to 78%.
So you're not seeing drivers leave the platform because of fuel costs?
We're seeing drivers come into the platform because earnings are elevated. April, the number of new drivers signing up to the platform was up 120%. In May, that's actually accelerated to 145%. So the earnings possibilities out there, the feeling of safety, the number one reason why drivers were off the streets last year was because they didn't feel safe. And I think now with the health situation getting much, much better, vaccinations, et cetera, people are feeling safe getting back in Ubers and getting out. All of us are meeting in person. This is not a remote meeting. And that's great for our business.
Okay, well, so you have a couple of constituencies. We talked about drivers, we talked about employees. Let's talk about passengers. Anyone who Ubered here today probably recognizes Uber has become, at least in some cities at some times, a very expensive ride. So what is going on, and is Uber just now a more expensive ride?
So I think inflation is hitting everybody, and inflation certainly in transportation is hitting everyone. Buying a car is more expensive. Gasoline is more expensive. And we're part of that, buying an airline ticket is much more expensive. And we're a part of that ecosystem. Now, I do think when we look at our marketplace, we measure one thing called supply sessions, right? Which is how many sessions do people open up the Uber app looking for an Uber against our supply hours? How much supply do we have? How many drivers do we have on the platform? And we're still in a situation where if we added 10% more drivers onto our marketplace, the marketplace would be much more healthy. So I do think that as we see our sessions increasing, demand increasing, and as we see supply increasing, essentially the marketplace will start to come into more balance. You'll see less surge, and you should see prices moderate.
So you're promising us decreasing prices.
Over the long term, yes.
Okay,
I do think pricing is going to come down, and we're seeing the marketplace signal in terms of ETAs are getting better, surge sessions are coming down, and we think that's a good thing for a healthy marketplace. At the same time, it's having no effect whatsoever in terms of demand, right? Mobility demand continues to be very, very strong, continues to grow. Our May trips were higher than April. Our May gross bookings were higher than April. So the signal that we see on the ground is actually very strong, and we're hoping it stays that way.
I guess I'm just wondering if drivers are coming back, if mobility is coming back, why your algorithm, why the marketplace hasn't established the kind of balance that you're talking about, and why prices haven't started coming down.
Well, the marketplace is establishing a balance, right, on a real-time basis. But what we see is that demand is essentially fast twitch muscle. Demand tends to come back much more quickly. And supply, right? These are drivers who they might have been working at an Amazon warehouse. They might have been working at a Best Buy, et cetera. Changing the nature of work takes longer. And we are absolutely seeing the number of drivers come onto the platform accelerate, but it takes time for that to catch up to the demand that really opened up very, very quickly as the world opened up.
Okay. Now, in some cities, there's a new kind of driver on your app, a yellow cab driver.
Yes.
Now, I'm old enough to remember when yellow cab drivers and dispatchers were throwing rocks at your offices. And now Uber has brought taxis onto the platform in cities like San Francisco, New York, I think Italy and Spain. It's been there in Germany, a couple other cities. So, tell me a little bit, are taxi cabs, do you think of them as a different product or a different price point in Uber?
Well, the yellow cabs aren't on our platform yet, but we certainly announced it.
Well, the deals have been announced.
Yes, we're hard at work on the integration. So I think for perspective, we've been working with taxi for years. In many of our international markets, whether it's Japan or South Korea or Spain or Germany, we have been working with taxi. And really our work with taxi is a win-win, which is taxi drivers get more demand and higher utilization, higher earnings. Cities get less empty miles in terms of taxis kind of going up and down the street looking for a hail. And for us, it introduces new supply into the marketplace. So it really is a win for all constituencies. And for us, the vision as it relates to Uber is essentially wire up any vehicle that's available for transportation of people or things, and then get access to demand for transportation if you want to go from point A to point B. So taxi is another vehicle type for us. It will increase the choice that you have on Uber. There are certain folks who like taking taxis, et cetera. And we think it'll bring more business for taxi drivers. We're the best technology company out there in terms of building a software layer on top of the real world that powers transportation. And I think the taxi partners that we've talked to are coming to realize that having the best technology partner out there with the greatest global scope and demand makes sense for everybody.
And just to follow up, the taxi fare in many cities is a regulated fare.
Yes.
So where do you see it sitting in the price options that Uber makes available?
It really depends on the regulation on the ground. So for example, in New York, the taxi fare can move up or down dynamically based on supply and demand. And those are discussions that we've had with a taxi regulator in New York. There are certain other markets where the fare is regulated and set based on time and distance. So it varies everywhere, and we can build technology that essentially works on the ground based on the regulations on the ground.
Okay. I want to talk about delivery. Bloomberg Live has been polling its Twitter followers, and we're going to be bringing those polls up during the day. So we have one now. What are you most likely to have delivered? I'm not sure we'll be able to see the results, but I'm sure they were interesting. You guys have been expanding delivery. You've added convenience, alcohol, groceries. You said at the end of last year that delivery was about on par, maybe a little larger than mobility, which was a fascinating benchmark. But I guess I've always wondered, like, how do you differentiate Uber Eats? To me, and maybe I'm just a bad Uber customer, it's a little interchangeable, sorry, but to be frank, with, say, DoorDash or sometimes Instacart. So how do you think about the advantages you bring to this market?
I think, first of all, a huge advantage that we have is a platform, right? In that we've got hundreds of millions of monthly active consumers who are using Uber all the time. And
they might be using the other Uber app.
Sure, but if you're using the other Uber app, essentially we have your identity, your payment details, we know where you live probably, and so being able to use Uber and Uber Eats becomes completely seamless. We've now introduced actually a loyalty program called Uber One, where you pay essentially the same price that you do other loyalty programs, the same price as a DoorDash Dash Pass or the Grubhub program, and you get free delivery essentially on Uber Eats, as well as discounts on Uber rides as well. So if you think about the subscription program as essentially content, we have more content than anyone else. So I think that for us, the big differentiation is essentially the brand, the technology that we build, but also the fact that you can work across platforms in a seamless way, and a membership program that drives discounts in a more uncertain world for consumers who use one service or the other.
I remember at Shop Talk when I saw you last, Emily Chang was interviewing you, and she was asking whether Uber Eats was due for a rebrand. And I wonder, have you thought more about that because it's more than Eats, or do you eventually unify the apps to get some of the leverage that you're talking about?
We've certainly thought about the Uber Eats brand, and we've done a bunch of work on it because, listen, we didn't get to Uber Eats anticipating that you would get into grocery and all of these other categories, alcohol, et cetera. But we've seen that the brand carries. And actually, if you saw our Super Bowl commercial and a bunch of commercials out there, we kind of make fun of the fact that you can use Uber Eats to order grocery, et cetera. And the usage that we've seen, our grocery business now is at a $4 billion run rate. Close to 10% of Uber Eats customers, a customer who orders on Uber Eats, now are ordering something other than food, which we think is really exciting.
Okay, the theme of our conference, as I said earlier, is looking forward. So I want to hit at two topics that might be important for Uber's future. The first is autonomous trucking. Mm-hmm. Now, yesterday you announced a deal with, of all companies, Waymo, which, not too long ago you were at legal war with.
There's a theme here.
Yeah, making friends out of enemies. But I guess the idea is to match their autonomous trucks with freight on your platform. First, what led to this kind of remarkable detente?
Well, it's more than a detente, right? It's a deep partnership that we have with Waymo, and for us, our interests are aligned, right? In that Uber essentially brings a enormous amount of demand for transportation of all things, including freight as well. And just as we want every trucker wired up onto the platform, if that truck driver happens to be a wonderful piece of software, we also want that driver wired up to the platform. Waymo is clearly a leader in the autonomous space, and this is actually a pretty deep partnership with Waymo, where we now we're going to have access to billions of miles driven as it relates to their autonomous driver. And if you buy a Waymo autonomous truck now, essentially we'll have a deep integration where that truck will be able to plug into the Uber Freight network in a seamless way and have access to essentially demand for transportation into that truck, so you can really drive the utilization of those trucks that are going to be incredibly sophisticated, but also quite expensive.
The idea of autonomy has always been particularly dangerous for Uber because drivers are a huge constituency. I mean, what is the future for truck drivers, do you think?
Well, I think that there's always this drama, which is, are machines going to replace humans, et cetera? And I think the reality is that machines, automation essentially complements humans. And so what we see actually as it relates to trucking over a long period of time is a hybrid network of human drivers and autonomous drivers. The autonomous driver will take over the longest highway paths, et cetera, and the human drivers will probably take over the more complex routes, or kind of hand over. The autonomous will hand over once you get close to city and handle the local trucking that is more complex. So we think ultimately there's going to be a hybrid network between humans and autonomous drivers for some period to come, and a dispatch system that can intelligently dispatch to a human or to an autonomous driver based on the nature of that trip is a huge asset in that envelope.
Okay, we just have a couple more minutes, and I want to get to two more questions.
I'll be short.
Yes, the first is EVs. You've made some strides migrating drivers in London to electric vehicles. You've also made some zero-emission goals for the company. So what kind of investment and what plans do you have to bring EVs to your delivery and your mobility fleet in the rest of the world?
So on the mobility side, which is where we're focused on right now, we essentially we reduce our margin for an EV trip. In the US, for example, someone who is driving an EV vehicle makes $1 more per trip. That comes out of our pocket, it comes out of our margin. That drives adoption of EV economics, especially with high gas prices, the earlier discussion that we've had. So about 8 to 9% of kilometer miles in Europe now are on EVs. It's lower than that in the US, it's 2 to 3%. But in California, for example, we have a deal with Hertz for drivers to rent Teslas, and Teslas account for more than 5% of our vehicle miles in a number of California cities. So those numbers are starting to move up, and we're putting the economic incentive into the marketplace to get drivers to switch over.
Okay, we have 30 seconds, so let's do a rapid fire round. What are your plans for your stake in Didi now that it plans to list in Hong Kong?
Well, once it lists over a period of time, we'll look to dispose of that stake.
Okay, will you ever order Uber employees back to the office in the way that Elon did with Tesla?
Not like Elon. We believe in flexibility, and we've talked about 50-50 kind of a balance.
Okay, last question. Who's your biggest competitor?
Our biggest competitor is car ownership.
Okay, Dara Khosrowshahi. We'll have to leave it there.
Appreciate it.
Thank you.